GetCrack. Wake up, motherfucker.
Keep the eye on Apple if we can, of course, talking about Berkshire there, which had been the largest, well, certainly still is, very large holder. The tech giant is planning to open an AI server factory in Texas. This is part of the announcement, at least, of a massive investment in the U.S. Deirdre Bosa joins us. She's in San Francisco. Has more for us on exactly what's behind this plan. Deirdre.
Hey, good morning, David. So let me give you a few more details. Investment of $500 billion over the next 4 years, pledging 20,000 jobs, and that comes less than a week after Tim Cook met with President Trump. Now, Trump was quick to front-run the announcement at a press conference last week on Friday, saying that Apple was going to build here instead because they don't want to pay the tariffs. So really drawing a line there. And again, today on Truth Social, the president posting, the reason, faith in what we are doing, without which they wouldn't be investing 10 cents, which is where it certainly becomes a little muddy. Apple has long been touting investment here in the United States. Here's a press release from 2021 during the Biden administration, where Apple pledges $430 million in U.S. investments over 5 years and exactly 20,000 jobs. And then back in 2018, similar commitment for $350 billion, raising the question, how much of the latest announcement is new? How much is it a repackaging of previous commitments? UBS pours some cold water on the idea of this being new, writing in a note this morning. While the headline figure on the surface is a large number, we believe it lacks substance at this juncture based on history. It also points out that Apple's infrastructure strategy is very different than that of the hyperscalers. Apple spends a lot less. It estimates $10 billion versus roughly $200 billion for Meta, Microsoft, and Amazon and Google in 2024. And that, in turn, has to do with Apple's AI strategy, which has always been very light on infrastructure and focuses on on-device AI or edge AI, leveraging its own silicon and leveraging the large language models that others like OpenAI have built. Now, all of this, guys, would seem to suggest that the announcement this morning is more political than groundbreaking and really a continuation of the Apple playbook from that first Trump administration. Let the president take credit to avoid tariffs on key parts of the business like iPhone manufacturing.
Yeah, you know, not dissimilar, Deirdre, in some ways from something else you've covered closely, the Stargate announcement, for example, pitched as though it was all done up in a week or two, when in fact, obviously, the plans had been in place for many months. But the announcement obviously tied in part, and it was an enormous announcement, not to diminish it, at $500 billion over the next, whatever it may be, 5 years in terms of data centers. On this one, UBS makes the point, obviously, you mentioned it. I mean, Apple spends so much less on CapEx as a percentage of overall revenues than do Amazon or Alphabet or Meta. And they seem to indicate that if they were really to move up, the buyback might be in question as well, right?
Right. They would have to sort of reallocate capital and, I mean, really enter a game that they haven't been in, right? That they would be starting on the back foot. However, you could argue that new trends in artificial intelligence like distillation could allow them to catch up faster. But again, this would be a very big shift. And I did find the data center piece of this very interesting and new potentially. What would they do with that space? But I mean, we know that Apple hosts a lot of cloud computing, even for its own users. That could be one reason. David, I'm glad you pointed out Project Stargate. It really sort of tells you how difficult it is to track these things. Has Apple added 20,000 jobs since that pledge in 2021 and again in 2018? It's hard to track that. You can look at their own workforce, but, you know, something like Masa-san has done, he can say, well, we invested in all these startups that created jobs. So, you know, it's nuanced and it's difficult to judge, but we'll see what other details come out, Sarah.
Do they get any tariff relief? Don't they still have to pay the higher tariffs?
Yeah, I think we're going to see.
China?
It's a great point, and this would all arguably be to avoid those tariffs. We'll see if that actually works.
Okay, Deirdre, thank you. Deirdre Bosa.
Futures just on a tear this morning. The euro seeing a little bit of strength as well. Is it too fast, too early, given that these coalition talks still have a few months to surface? How are the markets thinking about this?
Well, it's understandable to have a huge amount of relief, particularly from a European point of view, especially when you consider the disappointment over the French elections and how the government has been struggling to form a coherent policy in France for so long. There's massive relief that at least Germany looks as though it could move towards forming a government fairly quickly. And that's what investors are really hoping, because the German economy has been struggling. It clearly needs a coordinated approach to try and get it back on track. Investors are not so concerned whether it's left-wing or a right-wing group leading it. They just want a government with a clear mandate to get on, to spend money, to restore health in the German economy and give it a sense of direction. And if possible, to raise the debt ceiling so that that could include spending a bit more. That's partly why you're seeing the very long end of the German bond market underperforming today, and equities obviously doing better, but also the stories about the euro as well. And that's a combination of factors. Positioning going in to it was partly short of the euro, so traders have still got an unwinding to do there. They were pessimistic on the prospects for the euro, still thinking that the US dollar was a strong story. So that it still needs to be unwound. We've seen it in a relatively tight range. The dollar's been losing ground gradually in recent weeks against the G10 space, but that's mostly been driven by the yen. Now there's a clear chance for the euro here to catch up, and that will be a powerful combination that would weigh against the US dollar in general. So clearly there's a lot of extrapolating going on, but traders do that best. They like to get excited about these things, and clearly the euro is a potential for a big winner here.
Yeah, and that excitement led to a higher euro this morning. We continue to watch it. Let me ask you about tech earnings. We're looking ahead to NVIDIA numbers midweek then, Mark. And this comes at a time where we've seen Chinese tech doing very well and to some degree then decoupling from the United States. Where does that tech theme take us?
Well, this is something that investors haven't really seen for quite a long time. NVIDIA was dominating the tech space globally for such a long time. Every time an NVIDIA earnings comes along, it's a major event for global markets, not just for the equity space, but it's a big enough stock to be able to have a macro impact as well. And we've seen it several times. Come earnings day, there's a huge swing in NVIDIA stock. It has ripple effects across equities and across assets in general. This time around, it's a different story in China. You've got a company like Alibaba, it's had a fantastic rise. It had its own earnings out last week, beat expectations, people getting very excited about the AI story specific to China. And that is the difference this time. Even if NVIDIA doesn't excite everybody, the Alibaba story clearly has legs. There's another report today, they're going to invest a lot of money in AI infrastructure. So clearly there is a chance here that China decouples, led by the big tech names, especially Alibaba. We've got Tencent coming out later in the month as well. It's a very interesting time. Finally, decoupling may actually work.
3K around those levels right now. Can we just start with some of the conspiracy theories out there at the moment? Maybe they're not conspiracy theories. I want your thoughts on Fort Knox and where some of this buzz is coming from.
Well, I really don't know how people come up with these things. You know, it's kind of a social media frenzy probably. But look, I mean, we've heard it from the U.S. government. The gold's there, and will they need an audit? Will they want to have an audit? I don't know, but certainly those 8,000 tons of gold have been there for a very long time, and the U.S. government hasn't really changed its policy on gold holdings for decades, right? So. So I think market is confident the gold's there.
When you speak to clients, Francisco, have you got a decent read on why we're seeing some of the movement we're seeing? We've seen lots of reports about gold shifting from the United Kingdom over to the United States and being taken out of the vaults of the Bank of England. What is going on there? What's behind that?
Well, there's a couple of different things. There's, as you know, there's been a strong demand for gold from investors as a result of a lot of the policy changes we've seen in recent weeks and months, but also is the fact that tariffs could be applied on gold. So the U.S. gold market, COMEX, trades on a net basis of the tariffs. So what we've seen is forward points in the gold market have essentially started to reflect some of that. And also we've seen shippers trying to move gold from London, where the biggest market sits. The London bullion market is the biggest in the world, and we've seen that physical arrangement to push gold out of the UK particularly into the US market. That's been what's been shifting the shape of the gold forward market. But also I think the uncertainty around how things will play out. Gold's becoming, I think, more and more a core tenet of portfolios, and frankly, one of the few assets that has been providing diversification to equities and bonds. And I think that's the story. So we've seen, ironically, some backwardation kind of building back into the market. Not yet, but in the past it's happened. It happened during COVID. It happened during the great financial crisis. So could we see it again if tariffs kick in? It's possible.
Francisco, as someone who personally tried to visit the gold vaults in the UK and was rejected and told I couldn't, I feel personally invested in this story. A physical arbitrage like this, how long can it continue, this sort of dislocation in the market?
It can go on for a while. I have also visited the New York Fed Vault, and I did see a lot of gold when I was there 25 years ago. So I actually didn't get rejected. So just as a little anecdote, it was during my associate program back in the day. But I think the arbitrage can go on for a while. Until there's certainty on what will happen to tariffs, right? And to me, I mean, the whole tariff discussion is very much one tool to put pressure on certain political goals. So as long as the Trump administration feels they can use tariffs as leverage, they'll continue to use them, and therefore the gold market could still be tight for several months, I think.
That gold you saw, that's the gold of the BOE and other central banks, right? The Federal Reserve gold is other central banks, and our gold, the U.S., is in Fort Knox. So interesting there, where all this gold is stored around the United States. We also spoke to the Treasury Secretary about this idea about monetizing the balance sheet. Many people thought he meant maybe actually remarking U.S. gold. Now, he said that's not what he meant. But what if they did do that? What would that mean for the price reaction?
It's hard to say. I mean, but I think remarking U.S. gold is an accounting exercise for the most part. But it would certainly increase the Fed's balance sheet quite a bit, because that gold is marked at a very low price, as you know. So it would effectively boost the Fed balance sheet, and it would change the composition of it, at least on an accounting basis. I think it would probably be bullish for the gold market, because it would show that gold is no longer this barbarous relic that has been sitting on central banks and been dismissed a little bit. But now even the biggest central bank of them all is taking a renewed interest in gold. So certainly I think any renewed attention will be constructive for the market. That's my initial reaction.
If it's constructive for the market, and we do know this an administration likes to be creative, would you take it off the table?
Yeah, it's possible they take it off the table. I mean, I'm not sure why you want to boost the gold price at this point. I think what the U.S. government is really trying to do is lower energy prices, so inflation can continue to normalize and allow for lower interest rates. But I think they're also trying to weaken the U.S. dollar. I'm not sure how bringing attention into the gold market is going to help any of those two goals. So bringing down inflation, or three goals, right? Bringing down inflation, bringing down interest rates, and eventually weakening the U.S. dollar, which is, as you know, at record high levels or near record high levels.
Francisco, let's pick up on that last point. Bring it down energy prices. How can they go about doing so?
Well, we've seen this past couple of weeks has been fascinating to watch, right? We've had a meeting earlier in the week in Saudi Arabia, Russia, and the U.S. These are the world's three largest oil producers by a long stretch, and you can't help think that energy has been part of the discussions. I think that last third goal that Secretary Rubio mentioned in his comments of potentially engaging in some economic cooperation with Russia was a bit of a surprise to many, because European companies, U.S. companies have been pulling out of Russia for the last 3 years, or trying to pull out of Russia for the most part. So what does economic cooperation mean? In what format? Ultimately, Russia is a commodities producer, mostly an energy producer. So any cooperation is going to come on the energy front. So we know that President Trump wants to lower energy prices. Is that part of the deal? I don't know, but for sure, something that's been brought up in the conversations. How does the U.S. bring down global energy prices? How does that impact the inflation picture? And also remember, there's potentially an angle here, which is if Russia eventually gets sanctions relief, does that mean that we have a new stream of petrodollars flowing into the market? And are those petrodollars potentially as well a source of funding for the U.S. government down the line, as we see kind of this constant need to fill that $2 trillion budget deficit in Washington?
All right, what's up, guys? Yeah, what's up, Ignat? It's February 24th, 2025. All right, so got something to do today. Let's see what we got on the markets. Let's see. See here, we got earnings coming out. NVTS today. Okay, watching that one. HIMS, HIMS. Coming out. So NVTS, HIMS, we have Zoom. So let's see how well Zoom is. The stock hasn't done very well for years now, since COVID. So let's see. Yeah, after close, ZM, and what another one more. TEM, right? Okay, TEM. Tempest AI. All right. Let's all watch this stuff tonight, overnight. Let's see what happens. Okay. Overall, though, the market has. Oh, Riot 2 is also coming out, but I'm not really interested in Bitcoin miners. Well, I mean, if it gets really cheap, this one, then I'll put it back on the list. But yeah, I haven't been paying attention to these guys. Riot. I'm more into MSTR, like you see what I'm looking at right there. So let's look at overall markets. Okay, let's look at the overall markets. Let's see. MSTR. Yeah. So if I look at here, it made a perfect drop here. So this rectangle zone where we see support here, it's very weak now, though. Like, if I was going to short it here, what I would be waiting for is one last move up, okay, into 324, and then I would short it. But right now, I would be going long for another 10% here. So I'll show you like made a little scalp, little day trade today, very small one. So made another 1,000. So I used my natural gas. So I sold off some natural gas this morning. Okay, short. So I was short natural gas using cold. Okay. So KOLD. All right, it popped from the weekend. So we're running out. We're running out here. But it's bouncing. If you look at the natural gas spot prices, yeah, it bounced off where I would think it would get support. So would I short it again? Would I go long here? No, I wouldn't do either right now. Wait for Thursday, I guess. So let's wait on Thursday. But I took my money. So the rest of my money there. So I made 1,000 on Friday, made another couple thousand today, right? Just doing that and then longing MSTR. So not too bad. Very conservative right now. I don't want to make big bets. This is not the place to be making big bets, honestly. So I'm going to show you that so you can see. Okay, right here, see, very, very small, okay? And I'm not using options. Just give me my 10%, whatever, to 15 if I can make it, 20 if I'm lucky in a day, and I'm happy. I get my little money here. So like $1,000 a day keeps the 9 to 5 away, right? So that's how you want to do it. But if we were in a more predictable pattern, with swing trading, then yeah, I would just be putting in more money. But these markets are not exactly easy to predict until we've cleared the hurdle of NVIDIA. Until that happens, I'm not doing nothing. But I'll explain why, I had the whole idea of OpEx, right? It's going down to OpEx. And then Monday I would buy something. So I picked that one. You could have bought any other stock too, because HIMS did okay. You could have bought that in the morning, sold midday. You could have bought SMCI, bought in the morning, sold midday. Anything with has high beta. High beta meaning a lot of movement, right? So that's why the tickers I mentioned were important. And so keep those on your watch list, because you never know when you need to use them for a quick trade. That's all they're good for. Now, as far as like what's looking good for a swing trade, Zim is finally getting to the point where I needed to be. So I was building it up around here. I was buying around $18, $17, okay? And I was saying, okay, since it has earnings mid-March, I think this thing can roll up. And Zim shipping stock has very little to do with tech. All right. More to do with maybe a little bit of China trade, but once all that noise goes away, it'll just revert to the mean, right? So we've been dealing with this range of going between 16 to 23 for a while now, since May 2024 last year. And it kind of was about to break out. So if you remember last year, I said Zim could go to 40 one day. If it did it last year, it would have broke out here, but it didn't. You see that on earnings, it made a red candle, nasty red candle at major resistance. So it just went all the way swoosh, all the way back down. And eventually it finally came down to the buy area of 16, buy it back. Now I'm going to see if it goes to 23. If it can handle this zone between 22, 23, 24, it'll try to get to 30 again. And hopefully it'll do it before earnings and I can get out again with another 100% off of this stock. But will it go to 40 or 45? I need more proof here. Okay. So we'll see what happens. Now, let's see. Chinese stocks, since I mentioned Chinese stocks. So finally, they are pulling back. Finally, I've been waiting for this. So I've been selling along the way up. We've finally hit our peak, okay, on Alibaba's earnings last week. And I think that's it. Nobody's willing to buy any more of Chinese stock. So it's going to have to pull back somewhere. So I'm going to keep watching this. So KWEB is the ETF that tracks all the tech Chinese stocks. So you can use that as a proxy. You can use that chart to look at where you want to buy back Chinese stocks. So keep all the stocks that were mentioned in mind. So we have Xiaomi, XIACY, BYD, BYDDY, of course, Alibaba. And we can look at Tencent. So there's two Tencents, TME, the music group, entertainment business, and the main Tencent technology sector, TCEHY, that pretty much owns Discord. And we have Baidu, TIGER, Futu, TIGR, Futu, FUTU, and KC, my favorite one, KC. So let's see where KC comes back down towards. And I'll go get it again. So all these, yes, you can look at, okay? So these are the ones you want to look at, and we can come back later to watch them. Okay, Mexico's done pretty well. So it's pulled back. Now it looks like it wants to go back up again. So if you got it at 9 and you're thinking about adding, so MEXX is the ETF, 3X ETF of EWW. Okay, EWW is going to try to get to 53. I want to see what it does at 53 again, but it should try to attack it pretty shortly, because they were talking about the dollar in those videos, and they were talking about Germany too. So we have to have a lot of articles on Germany I'm going to read. But the dollar, let's see what happens. Let's see if it keeps rolling over, okay? But we don't want the yen, though, to really roll over. That's going to be bad. We don't want this one to collapse too fast. All right, the euro is going to help us out here. So if the euro is going to be more in demand, then yeah, that will help. So that's what that video was talking about. And also with the gold thing, I have no clue what that means for gold, but commodities itself also mentioned was U.S. oil. And so gold prices. So yeah, gold's back to $70 a barrel for WTI. So yeah, we're going to have to watch all these things. All these things will come into play. Okay. All right. So let's see. Okay, so I'm going to play this video on Bitcoin. Let's see what you guys think. And we'll continue on from there. So this short video on Bitcoin, and I'll go read some articles.
We have increasing volume, but each attempt to rally looks quite weak. And even when we compare the volume on the demand bars to the volume on the supply bars, we see that most of the times the red volume is higher than the green volume. Bitcoin was attacking the resistance, but this attempt was very short-lived And in fact, we are fading here around the level of the overbought condition. And I still think, guys, that in order to resolve the structure, we need sooner or later to revisit these levels again. So something like this, for example, when we have a final shakeout, grabbing liquidity in this short-term value zone, and that will be the point where I would like to see more demand coming in.
All right, pretty simple. So eventually, I think Bitcoin will go down. So that's why I said look at the shorts for MSTR. So that alongside other shorts that we might take in the market. So when we get closer to that point, we'll do that, and hopefully, Nvidia will do well, and we can go higher first before going down, because just collapsing right now, it's going to introduce a lot of problems. I think it's a lot easier for them to like push it up from here and try to attack at a higher point. That'll be the best position to do it. Okay. Let's see. Okay. Let's see what else gonna talk about. Let's see. Okay. Oh, HE. I want to talk about that one. All right. I'm gonna bring that up. That's gonna be important. HE, Hawaiian Electric. So by the way, you use MSTX. That's what I was using. That's how I got my gains for today. $1,000 was using MSTX. So if you look at the MSTR charts, you could here with that line, that green area. See, you're gonna buy at the lower half of it. So let's say from here, you go like, okay, well, from today, I would try to go down about 18%, right? From that top there. So because MSTX is 2x. So MSTX, the ETF, tracks MSTR twice. So from here, we go down to close to 19%, right? So somewhere in the 28 range, right? So I can set my buy orders here. So what I would do, right, if you were doing this, all you would do is like, okay, in the morning, I'll set a bunch of buy orders from maybe 29 something to 28 something. And let's see how many of them hit. Bang, 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 bang. They all got bought up, right? And then what you would do, you would just do it that way, because if you don't got time to watch it, it's just that's the way I would do it. And then from there, if they got hit, your phone would be text message, like, because you would set an alert. Like you can go to like a Trading View or some other application, stock charts, whatever. I'm assuming Thinkorswim can do this too. And then what you do is like, okay, when the price hits some level less than this or whatever, and then you send a text message. Once you get that text message, and then you check if your orders got filled, you see your orders got filled, and then what you would do is like, okay, set some sells. So you would set your sell up here, right? Back up here. If you don't got time to watch it, I mean, luckily it went all the way just above that level here, that rectangle. So you would have had sell orders along the way up, like bang, 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 bang. Like you just spread them out. Just say like, I sell some here, sell some here, sell some here, or whatever. Or you could do a trailing stop. That's fine. You could do it like that. So if it drops like a certain percentage when it hits a nearby top, it should automatically trigger that, and you're out. That's it. That's all you gotta do. So nothing too complex. Very easy. Now, what you would do now, since we're already done with today, like it's about 30 minutes until close, what you'll see is like, what you want to watch for is, since it's rolling back down, it's going to try to hold this tomorrow, I think, this level at 30. So MSTX. So I would try to get back in again and see if that rolls up. That's no guarantee what's going to happen tomorrow. I don't know what's going to happen. There's no news, no nothing. There's going to be some earnings, but nothing is going to be as important as Nvidia. Okay, so no central bank is talking. Jerome Powell's not talking, so nothing. So you're gonna have to watch what it does. That's gonna be hard, I think, because like if you did HIMS, you could have did the same thing, right? Just buy like say you know the resistance for HIMS is somewhere here, right? See? So that's the last major area. And then the other side would be like the bottom of this. Or maybe you would say like half of this. Oh, yeah. Half of this would just cover the whole range up to Fridays. So that's probably not good. But let's say you took this, right? Roughly. And you take half of it. And then you say the bottom half you'll buy. So you'll buy anywhere from 46-ish to 44, let's say, right? Because you don't know how low it can go, because it could go low all the way down here. Yeah, from this point. So yeah, you could, yeah, it's up to you. I don't know. All this stuff is like kind of theoretical, man. Because if you just do day trades like this, it's just like, well, you don't know exactly. Because Mark Shkreli on Friday was willing to buy HIMS, but anytime he bought here during the first hour was terrible, because then it's like the rest of the day just kept lowering lower, and then Monday it went down even lower. And that's the thing, because every Monday, typically after an options expiration goes down, and Friday was already a down day, so that means Monday should be even worse, right? We're going to have a shakedown, and we've just had that. Doesn't guarantee anything about tomorrow, though. I have no clue. But typically the Monday or Tuesday, if the Monday is a holiday, after a Friday options expiration, monthly option expiration, is typically down. Okay, so I can reread some articles that I presented to you guys on October, I believe, all the way back then, or it could have been November. I don't remember, but I definitely went over this before. And let's go on now, and I can do this and share the screen, and then I can go over this point to you again, just like I did the Max Payne stuff, you know. All right. Let me get this stuff set up. Okay. All right. So I've read this before. Historical look at day after options expiration trends. It has been a while since I've talked about day after options expiration. This was written in 2009. But this particular oddity might be a change in. When is option expiration day? Equity and index options expire at the close of trading on the third Friday of every month. So that's options expiration, right? My previous posts here and here on the topic could be summed up as the day after options expiration, Monday, or Tuesday if Monday is a holiday, has historically been very bearish when expiration day, Friday, was down, but neutral when expiration day was up. So that was the old thing. That was the old theory. Clearly, from 1970, the day after options expiration has been very bearish when the market fell on expiration day, but only neutral when it rose. Okay, but notice what has happened more recently towards the right hand of the graph above. Okay, sorry guys, because when this was archived by me, apparently the guy who hosted the images here, it's gone. This stuff doesn't exist anymore, so I don't know what these images were. You just have to believe it. The difference between the red and green lines has all but disappeared. The next graph shows the same results as from the first 2000. In more recent history, there's been little difference in day after options expiration returns based on expiration date. They've been both about equally bad. In fact, in the last year or so, the observation has actually reversed, with positive expiration days leading to the most bearish returns. So even if we had a good Friday, it still went down. But even worse, apparently. Well, but this was since 2009. Things have changed since then. So for most of market history, negative monthly expiration day returns beget negative returns the following day, and positive expiration days beget neutral returns. But more recently, that difference has disappeared, and both are now equally bearish. Okay, let's go here. So this article was like the options expiration week effect, OPEX seasonality, and all these links are in the description, so you guys can go there and read this whole thing. But what I wanted to do was go all the way down here. Let me see what happens after expiration week here, blah 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 blah. Okay, what happens? Okay, before I don't care about the day before. I want to do the day after. What has happened the day after OPEX day? Historically, S&P 500 has performed poorly the day after OPEX day, just like that other article written 2009 said. So this was a more recent article. Let's backtest and make the following trading rules. So this is up until 2024 data. We go long S&P 500 at the close of OPEX day. We sell at the close of the day after OPEX day. So normally a Monday, could be a Tuesday. So if we go by that strategy, so if the only trades I did was the Friday, the third Friday of every month, right? At close, I buy. And then the next Monday or Tuesday at close, I sell. So if I did that over the years, my account would look like this. So I would start at $100,000. I would make some money, and then I would just start losing, and then go back up, and then I would just lose. So over time, this is a losing strategy. So the bias is towards a red Monday or red Tuesday after OPEX Friday. So that's why you don't buy on Friday for the third month, because usually, not always, usually it's just going to be another red day. Okay, if you got the first red day, and apparently with recent data, even if it's a green day, it'll just go down. So things seem to be going that way, and this is kind of like, this is what quantitative analysis people do. They like to make statistics of every trading day or something, or they'll say like, okay, Black Friday is usually like this, or they say like the Decembers are like this and that, and then you go into seasonality and all. Yeah, you can make a whole bunch of theories like that. And then if you want to go further, you can look at certain structures of the options chain and think, yeah, that's what the quant guys like to do. So that's quantitative stuff. Okay, most of the hedge funds, they try to implement a lot of these tools and do it that way. But you need a lot of money for this to work out all the time, right? Because you can see, like, statistically, you'll eventually get your result, because over time, this thing is just going up and down. Your account is going up and down. Eventually, it'll return to the mean, right? So some kind of average effect would take place, whereby if you keep doing these trades, you'll eventually start making money. So that's just the way it goes. But if you start out with a tons of money doing little trades like this over time, yeah, it makes sense. So that's why a lot of hedge funds, they just do the quant stuff. Yeah. Hey, what's up, 12 man? Okay, so that just gives you a flavor. So I've explained this before. Okay. Now, let's look at Germany. See what Germany's up. So they had elections, and a lot of people are just talking about the left wing, right wing, and somehow AFD, the far right, supposedly far right party, and all. So you probably get a lot of the stuff in the feeds now. A lot of people would talk about this as a reaction to their immigration and whatever. But what I'm more interested in is the economy. So the previous chancellor, he's going to be out. He's going to be kicked out here. Scholz calls for reform of German debt brake right after election. The chancellor, who is trailing in the polls ahead of the February 23 snap election, expressed confidence that Germany will have a parliamentary majority to loosen the debt brake. Okay. German Chancellor Olaf Scholz reiterated his call for the country to relax its strict spending rules, pushing for Germany's constitutional debt brake to be reformed immediately after national elections later this month. So this was written in February 15th, before yesterday's election here. That was 2 weeks ago. So we need a reform of the debt brake in our constitution directly after the upcoming election, Scholz told the Munich Security Conference on Saturday. The chancellor, who is currently trailing in the polls and at risk of being ousted from power following the snap election on February 23, expressed confidence that Germany will have a parliamentary majority to loosen the debt brake. The debt brake is a constitutional requirement that limits the German federal government's structural net borrowing to 0.35% of gross domestic product. The Christian Democratic Union, as Bavarian sister party Christian Social Union, and the centrist Free Democratic Party oh God, want to maintain the debt brake, while Schultz's Social Democratic Party and the Greens would like to see the constitutional limit on borrowing amended, as well as making a pitch for loosening of Germany's borrowing restrictions. Schultz used his appearance in Munich to press for increased defense spending and an overhaul of European debt rules, so the whole EU. Schultz said the European Union's Stability and Growth Pact should be overhauled to exempt defense spending that exceeds the NATO target of 2%. The rule change would be temporary while maintaining fiscal discipline, he said. Okay. So I think this is good for some defense contractors. All right. That should be good for them. So definitely something to look at there. But also, this means more stimulus. So Germany wants to do stimulus. EU wants to stimulate. So because Germany is the biggest component of the EU right now. And then you have China doing stimulus. So you have two large blocks doing stimulus. Then the only one left would be the USA. So right now, Jerome Powell is tightening, right? So we're going to have to see how much Trump is going to do on the fiscal side. Because so far we're just doing a lot of cutting with the whole Doge stuff. So I'm not sure if how that plays into the global liquidity. So we're going to have two pieces moving up in spending, one big piece going down in spending. They probably balance each other out. So we'll see if what the dollar does. Okay, so how much money will flow into the US from this stuff? Okay, let me read another article. Financial Times here. Frederick Merz. This is the guy who won. So the new chancellor, Merz, weighs using outgoing parliament to loosen debt brake. German election winner says he will hold talks with other parties to adopt constitutional change in the next 30 days. So he's already hurrying it up. German election winner Frederick Merz is exploring ways to loosen the country's strict borrowing cap by reconvening the outgoing parliament, where mainstream parties still hold a supermajority. Speaking to journalists on Monday, the leader of the center-right Christian Democratic Union said he regretted that far-right and far-left parties secured more than a third of the seats in the Bundestag, giving them the power to block any constitutional changes, including to the so-called debt brake. Both the Alternative for Germany, EFD, and Die Linke have said they oppose forming the debt brake to fund more defense spending. But Merz remarked that mainstream parties could still act under the current legislature. So even before the new parliament gets into session, he's already hurrying it up and trying to get the spending through. So this is interesting. They are desperate to get these things done here. They want to spend. They want to pump more money into the Ukraine and whatever other social benefit stuff that they want to do. Because as I said, the US funds a lot of how Europe works. Europe can institute, free healthcare and all these things because they don't need to spend as much money on their defense, right? So if these guys want to keep their social spending, and then we're just going to say, no, we're not going to help you in defense anymore, right? So because Ukraine is going to be a big deal for that. And with NATO as well, how much the US is really going to help Europe now. We're just going to tell Europe to spend their own money. That means they're going to cut into their social programs, just like free healthcare, right? That's a big part of their budget. And free education as well. Free education. They also have free education. Okay. But Merz remarked that mainstream parties could still act under the current legislature, which is running until March 24th. He would hold talks with the Social Democrats, the Greens, and the Liberal Free Democrats about finding a solution before then, he said. Before I speculate publicly about it, allow me to talk about it with the Social Democrats, the FDP, and also the Greens now in the next few days. So that means we still have 4 weeks to think about it. Merz added that the Bundestag was able to make decisions at any time and act without any interruption, even after elections. His CDU and his Bavarian sister party, CSU, have won German parliamentary elections with 28.5% of the vote, clearing the way for Merz to succeed Olaf Scholz as chancellor. But the AfD and the Die Linke have together won more than 210 seats needed for a blocking minority. That gives them power to prevent any amendment to Germany's debt brake, a rule enshrined in the Constitution in 2009 to limit government borrowing and keep the structural deficit at 0.35% of GDP. The same condition applies for creating a special off-balance sheet fund, such as the 100 billion euro pot announced by Scholz in 2022 to fund an overhaul of the German armed forces after Vladimir Putin's full-scale invasion of Ukraine. All right, so you can read some more of this. This, I guess, goes to more history and some other economist stuff here. Okay, yeah. Let's see, blah, 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 blah. Okay. Let's see, outgoing finance minister Jorg Koskis, also from the SPD, said there was far too little time to ram through such changes, adding it would be a questionable political signal if constitutional amendments were not made after an old majority. Yeah, they're desperate. Meanwhile, AFD co-leader Alice Wendell reiterated her opposition to such a reform. The state shouldn't spend more than it brings in, she said on Monday, adding that her opposition also extended to the option of creating a special fund for defense spending. The Linke co-leader Ines Schwerdner said the party could agree to a change of the debt brake on condition that more state money is invested in social infrastructure. Here we go. Now they got to do what everyone else does. Figure out where that money goes, right? They don't have Daddy USA to take over their defense budget for them so that they can spend very little. This time, it ain't happening. All right, let's see another one article here. Got one more here. Let's see. What's this one? I don't think this one has anything new that I haven't read already. Okay. Get rid of this picture here. Germany's military spending plans in doubt after the rise of AfD and left parties. I think we all know that. Friedrich Merz plans to ramp up defense spending in Germany have hit an early obstacle after a surge in support for fringe parties left him potentially locked into strict restrictions on government borrowing. Yeah, we know that. Okay. At a time when it is crucial to raise spending for the military in Ukraine and ease the tax burden for workers and firms, Germany may struggle to find the fiscal space to do so. Berenberg chief economist Holger Schmiding said a failure to ramp up military spending could all get Germany into deep trouble with its NATO partners. By infuriating U.S. President Donald Trump, it could also add to the risk of a U.S.-EU trade war. Beyond military outlays, Merz has signaled his priority is to cut spending and lower taxes, yet economists have said such measures won't create the kind of fiscal space necessary to modernize Germany's aging infrastructure and boost defense spending. The far-right Alternative for Germany wants to stick to the country's strict debt framework, which limits budget shortfalls to 0.35% of gross domestic product, with leader Alice Wendell on Monday doubling down on her disapproval of any loosening. Merz will relax the debt brake, she told reporters in Berlin. That is exactly the opposite of what this country needs. The AfD's opposition puts onus for any changes on the left party, which is in favor of ditching the debt brake, but also wants to lower the defense budget and opposes Merz's platform on many other issues, including taxation and migration. We were against the introduction of the debt brake from the onset, the left's co-leader Heidi Reichmark said on Monday. But we are pleased that there is movement here. The federal government will also have to move. Federal Merz will have to bite the bullet. We will only vote under certain conditions, only if investments are made in infrastructure. So you can see Germany's shrinking debt load stands out in global stage. So G7 countries moving up here, US moving up here, Germany moving down, UK going up, France up, Italy up. So yeah. Theoretically, there could therefore be a cross-party consensus with the left on setting up an off-budget infrastructure fund or exempting infrastructure investments from the debt brake to create more room for defense spending in the core budget. Economists Marian Wohlberger and Robin Winkler said. This would probably still constrain the extent of additional defense expenditure in the next term, but it would at least create some room for maneuver. The Social Democrats, who together with the Greens campaigned for relaxing fiscal rules on Monday, appear open to such an approach. The financing of future tasks, from infrastructure to digitalization and security, will be of central importance, SPD budget lawmaker Andreas Schwartz said. A reform of the debt brake will be unavoidable. A Democratic majority will be found for this. There will certainly also have to be talks with the Greens and the left, who will certainly also want to put forward proposals. Okay, let's see. Continue. In this context, everything is possible must be discussed with great caution, of course. The last time this was done was in 1998, when we had to make decisions with regard to former Yugoslavia. So it's a rare occurrence for Parliament to reconvene, but it's not the very first time it happened. I see. Yeah, blah, blah, blah. Germany predicted to lag Euro area peers this year. Euro area growth for Spain. Spain's doing okay. Interesting. Yeah, Germany's lagging, that's for sure. Let's see. Okay, Bundesbank President Joachim Nagel said this month that his institution will present a proposal on how to reform the debt brake after the election, arguing there's room to maneuver. The government's Council of Economic Experts has also put forward ideas on what should be changed. But without a constitutional majority, Germany's next administration may have to find other sources of funding. That could also include cuts to welfare spending and getting rid of subsidies and injecting equity into state-adjacent companies so that they can borrow more. Other ways to ramp up military spending may yet come to pass. Work is underway in the EU level to find the necessary wiggle room in the bloc's fiscal framework. There's also talk of joint financing, which is becoming a realistic option for a growing list of leaders. All of this raises the chance that we will get some EU-wide approach to raising military spending, because new EU-wide debt would fall most likely out of the debt brake. Okay. All right, guys. Interesting. I think we've got a lot of stuff to think about right there. Okay. 10 more minutes until the close. See what we got. Yeah, I'm going to watch hymns. Let's see. MSTR, I guess. It's pulling back down. Should I buy again? Man, decisions. Yeah, not easy, huh? Sox L is making a new low just before. Okay. Yeah, it looks like there's a lot of things to look at here. Okay, I might trade Sox L too. Let's see. So if you see here, so SOXL is 3x leverage of semiconductors. Yeah, you could play this before NVIDIA. Damn, I don't know. This chart looks so ugly. God. Yeah, you see this? This is like, I mean, if XOXX gets closer to 218, I might go for XOXL. Okay, let's see. So if tomorrow we go down again, one more percentage for SOXX. So if we go down 3% for XOXL, then let's see. Shouldn't be too far from here. So 26-ish? Close to 26? Okay, maybe I'll buy there. I don't know. If I want to gamble on NVIDIA, I don't know if I trust NVIDIA here. But sure, okay. Now, some other stocks to look at. Tesla. Tesla back at the support lines here. Yeah, okay. So if you're a big bear and think NVIDIA is going to eat shit, then we could go down to 283 from this level right here. So I was hoping optimistically we would try to get 400, but with the way this is looking right now, this could easily change. This could be a double bottom and then we can go up, right? So, but roughly it'll look like this. It will try to get to 400, maybe get a little bit over 400 and then roll back over. That will be what I'm thinking. So it could go up 20% here before going, what, 30% down. So that's a great trading range right there. Now, if it just rolls over here, okay, fine. That's going down 15 more percent. Now, if I was going to bet on the upside first, then TSLR for the upside, okay? So let's say it goes up 15, so maybe 30%-ish. Maybe, yes. Let's do 35, 36, 36%. Okay, let's see. So I said if this thing went up close, let's say 40%. Okay, let me be optimistic. So let's say I go 40%. So if I buy here in the 27s, yeah, so I can get to like 38. Okay, so that's where I would sell 38. So I would use the TSLR ETF. So this was 2x. Okay, the move of Tesla. That's what I would use to trade it, and then I would short with the inverse ETF when we get there. But I will have to watch how Nvidia goes, because this thing could just roll over, man. These guys could just roll over. Yeah, that's not a good look. Definitely not a good look. But still okay. Still bullish long term. But I'm thinking like it will only happen till March. All right, guys. Okay, and tomorrow morning we'll have Home Depot, so we got to watch for that one. That's what we have to watch too. Okay, let's see what other stocks we have to look at. We got Zoom, we got CLF. CLF will report also, so let's look at HD. So HD Home Depot, yeah, if this thing collapses, maybe it goes down to 300s. Okay, from 380, 381. The other one, CLF Cliffs, Cleveland Cliffs. So this is a steel company, $11. It hit like $9.50 towards the end of last year. Yeah, it could be. It could be a good time to buy steel stocks soon. Yeah, I've been waiting for this since it already did its move in 2022. This was a popular stock in 2022 for sure. A lot of steel, aluminum stocks. AA was also popular, right? And then you have US Steel. So it's been kind of doing nothing since that big move. This is huge, $5 to $100. This was a great trade here for anybody interested in aluminum and steel and things. This was awesome. So yeah, US Steel is kind of ugly compared to CLF. You get more of a trading range now, but yeah, let's see. CLF is going to report after the close. All right, so just like HIMS after the close, these are going to be big boys. And I'm also looking at NVTS since CKJ told me to look at that again. I did mention this one before, and we're back at $2.80, $2.90. So after earnings, maybe it'll go down to $2.70. I'll buy it. If it's a bad reaction in the morning and it'll recover, great. But I don't know. It could be going up anyway from here. So yeah, that's something to look at. All right. Let's see. What's the other ones? Riot, I covered. AAOI also did pretty good. Yeah, what's up, Antoine? Yeah, AAOI. Let's see. This thing for the past 2 days have been trying. It was up like 10% in the morning, Friday, and it was up 10% again Monday. So it's trying to go up. And we got earnings on this one after Wednesday. So I'm going to be watching this one too for Wednesday. See what's another one to look at. DNA earnings. Let's see if it's today or tomorrow. I think it's tomorrow. DNA. Watch this one. So yeah, this one's going to be interesting. I think we're at a midpoint here. We're at that midpoint here. Just going into earnings. Okay, I'm watching this. Let's see if it can go back up to 13, and then we can break out again. So I'll watch this one and see how it does on earnings. DNA, Ginkgo, Bioworks, WGS. It already had earnings last week. It was a good earnings. It's pulling back now. So let's watch it. 95. Let's see if it can get to like 79, 80. Like, I don't know if it will. Maybe it'll just stay here and then bounce back up. So I'm definitely going to see if I want to be a buyer here. Sound, SOUN. So it's getting hit again today. Now it's at the level where it's going to just get swamped and go straight down to $6 if earnings on Thursday after the close doesn't work out well, but it could be on its way back to 20. So if it does well on earnings, and if Nvidia does well too, because it's related to whatever Nvidia does in some respects, then yeah. So SOUN, Soundhound, I'm gonna watch for Thursday. Definitely, it's at a good point. MBLY, we're back at the midpoint zone. Okay, so we were testing this area here, this midpoint area of $16 today, and it tried to recover back. So definitely put this on your buy list area. So MBLY. So if we get through Wednesday, fine. Then yeah, this is going back to 18 and see if we can go back to 22. Okay, that's one. Mobile Eye. mRNA. All right, so I've been watching this since earnings. I like that it's holding. It's been holding the 34. So it's got hit a lot because of the COVID vaccine sell-off. So it's not popular anymore. But I'm definitely curious to see if this thing can get back up to 80 eventually. So I'm just keeping this on the watch list just in case when March comes around, I feel like buying this for longer term play. So we gotta keep watching it. EWW I mentioned already. Okay, we already did that. Tesla did that. CCJ uranium. Okay, CCJ and uranium. Right here, CCJ. So we're back at 43. So after earnings, and then Friday killed everything, and then Monday now here. Okay, so watch that area. This level might hold. So uranium, CCJ, I'm gonna put this all in the like material sector, energy sector type stuff. So if you look at the whole uranium complex ETF, URNM, we're at a bottom here. So we've just went through the bottom of 37. We're at 36. Watch this level for uranium, URNM for uranium stocks. Okay, and then let's see. Last one is lithium. So I'm gonna look at lithium. So LITP, lithium ETF here. Market is closed now. You see, we hit the bottom again. So this is the bottom of September and August, right here, last year. So around $6.40. So a lot of the lithium mining stocks have been hit. So I'm going to be watching this one. And then SGML. SGML is probably the lithium miner that I probably like to play. I know there are others, and we'll have to go over them. And this one's at $11. So yeah, definitely. If this is the bottom for the whole complex and lithium is going to be on a rise, then yeah, I'm going to play this one. SGML. So these things put on your list for long-term buys after March, April. We'll see which time would be the best place to buy it. Okay, guys. So let's look at Bitcoin right now. Yeah, it's in a precarious position. Terrible. So once we break down here, we're definitely going back to 80, just like the video suggested. We're going to be looking at that, but it could bounce. It could still survive and do a fake out, try to catch more people to buy up into 108 again before falling back down. That's possible. So that's why I'm looking at MSTR, see if I can go long again. Okay. So it tried its best this morning to bounce up, right? So we had, and now we're right back where we were. So I'm gonna have to decide if I'm gonna buy tomorrow morning, see what's gonna happen there, because that could be a good test again. This is gonna test this several times probably this week, and into the options expiration. We have to remember, crypto options expiration, futures expiry is the last Friday of the month, not like stocks and index futures, which are the third Friday of every month. Okay. All right, guys. I think that's it. We got 1 hour. Excellent. So please like and subscribe to the Urban Landlord right here. All righty. And I'll see you again. So donate to Portia. We only got a few more days left in, this week, right? Up till Friday. Only a few more days until the end of Black History Month. So donate $20 a day to Portia J, $, PORSHAJAYE. for the Cash App, and PayPal at PORSHA@jghb.info. And you can email me at CrackCrack@jghb.info for any questions. And oh yeah, tropes. Yeah, you sent me that email where the video. I did watch that video when you emailed me some days ago or last week. I forget, but yeah, maybe I'll go over it. I think that will be good for an explanation, maybe a general, I guess, philosophy of investing and trading, right? Anyhow, so yeah, also you can also support through Streamlabs, streamlabs.com/TheUrbanLandord. Alrighty, guys, I'll see ya.
Feel like I should, feel like I should, feel like I should, feel like I should go. Go. Feel like I should go. Feel like I should, feel like I should, feel like I should, feel like I should go.